Okay, so this evening we're going to be talking about the patterns that can help you become very profitable in the market. Okay, so we said that there's what is called high probability entries, high probability entries. Okay, so when you are entering a chart, when you are studying the market and you are looking to enter a trade, what you're looking for is a high probability trade. So now for a high probability trade, why do we use the term high probability trades? We use the term because when it comes to trading, when you enter a trade, it's not guaranteed that the trade is going to do what you expect it to do. But there are certain things that you can see, there are certain things that you can look at that will give you a high level of confidence that the trade you're about to take is going to go the direction you expect it to go, right? So that's why we call it high probability. We don't say guarantee trade. We say a high probability trade. Now, there are times where your high probability can become almost a guarantee. I said almost a guarantee, right? Of course, at that point, you have a mastery you have a serious handle on what you are trading, and you are not trading all over the place. You're not trading all over the place. You're not picking entries here and there. No, usually you are following a particular setup, a particular strategy, a particular setup. That's what you're looking for. You know what you're looking for. And until that thing happens, you do not place any trade. Until that happens, you don't trade. When the market is moving, you just relax and you watch. You relax and watch and wait for the market to give you what you want it to give you. And when it does that, you enter the trade. Is almost guaranteed, right? Except something happens in the market, that maybe a news event happens and then it goes against what the current state of the market. If that doesn't happen, you know that definitely the setup that you're trading is a high probability setup and is almost like a guarantee, right? It's not a guarantee, but it's almost like a guarantee because your setup, you've used it over and over and over and over. You've come to a level of mastery. You've come to understand it, right? So, and then you usually will wait for that setup to give you exactly what you're waiting for before you can enter any trade. All right. So that's what we're looking at when we talk about high probability setups. And then one of the high probability setup scenario that you can have is basically patterns, right? So we're talking about patterns. When I made the post on the group, I talked about patterns and I said there are several patterns. Now the M and W patterns we are talking about today, they are just the first ones we're going to be talking about. There are several other patterns that we'll be discussing subsequently, right? Now, these patterns, what they do is they give you a trajectory of price. Whenever price is coming down, for example, whenever price is selling, it doesn't sell in a straight line, okay? So you may see something like this. You may see something like this, right? Price is coming down, but it doesn't show you directly it shows you the trend that is coming down, but it doesn't come down directly. It doesn't come down in a straight line, right? It doesn't come down in a straight line. And sometimes you might even expect that price is dropping, price is going to sell. You might even expect that the price is going to sell, but at that time, at a point, as price is coming down, at a point, price may start to behave as if the sell has stopped. Maybe it wants to start buying. You look at certain things and you say, is this thing starting to buy? For example, there's an instrument I was trading, USD JPY. I knew that, okay, this thing, I've been looking at it for a couple of days, right? And I knew that, okay, this price is going to sell from this level and it's going to sell to a certain level. And it's one of those patterns that I was watching actually is still playing out right now as I speak. But earlier today, what happened was that price started looking, even though I know that is a sell pattern, is a sell setup, is a sell trend, it started to look like that trend was fading. It looked as though the buy setup was about to start. It looked as if that a trend line actually happened. Price got to that trend line, and it looked as though price was reversing. I was wondering what's going on. I expect price to keep coming down. I expect it to come to a much deeper place, you know, but it wasn't looking as if it was going to come there anymore. I was like, okay, let's keep watching. I exited my trades and I kept watching, right? You know, so eventually this evening, just as I'm having this class right now, that move I was expecting is happening right now as I'm talking to you right now. If you watch USD JPY right now, you see that it's just dropping at this moment. But that dropping that is doing is what I was looking at 3 days ago. But earlier today was looking as if it wasn't going to happen again. You see? And even that drop you are seeing right now, I still expect it to drop very hard, to fall to a much lower level before it starts to buy again. So what I'm trying to say is that whenever you see price happening, you see a particular chart and price is falling or price is rising, you don't expect that price is going to rise in a straight line or fall in a straight line, right? So at certain points, you might start wondering what's going on. Is it changing pattern? Is it changing direction? You know, so all of those things happen. But then what you want to do is that when you come into the market you want to trade, like we've said before several times, you want to first of all identify what trend is there in the market. What trend is there in the market? What trend is there in the market? What is the trend? Is it a sell trend? Is it a buy trend? For example, you could see that price is doing this, you know, price is doing this, and it just does this. This is a buy trend, okay? This is a buy trend. This is price trending upwards. Price is trending what? Upwards, right? Okay, so now, since price is trending upwards, then you start to see something like this. Then you see price doing something like this. It comes down like this, right? It does this, it comes down like this. Then you see it again doing this, and it comes to this top again, right? And then at this time, what you are seeing is I'll show you what you are seeing right now. So here is it. You can see that price was here. Price was in an uptrend, okay? Price was in an uptrend. Even though the uptrend wasn't straight up, because price is never straight up and is never straight down. Price never goes straight up and price never comes straight down. So it doesn't matter how price does. What you're looking for is an overall trend. Sometimes you're on a candlestick, right? You can go to the line chart. Over here, on top here, you see candlestick, right? When you go to line chart, you discover that it will give you a different pattern, right? It will give your candlesticks will turn to lines that are moving in the market. So sometimes that can help you get a clearer picture of how price is playing out on a longer longer time frame. When you look on a longer time frame, how is price playing out? What is the pattern that price is printing on the chart right now? What is the pattern that price is printing on the chart right now, right? So that is something there. But here you can see that price moved from this lower level, right? It kept going up, down like that. But then you can see clearly that this was an uptrend. Price was trending up from here. Then it got to this point. So when it got to that point, what happened? It started coming down. But it didn't come down straight. Then it got to this area. Look at this. It got to this point. Then what happened? It started going up again. And then guess where it got to? It came to this point. And then this point happens to be a resistance level from where it came down before. Can you see that? Price was trending from this low, went up here, up and down until it got to this level. Then it pushed down from there all the way here. And then it started going up again all the way to this point. Now getting to this level which is a resistance. Why is it a resistance? Because we can see that price pulled back from here already. Price pulled back from here. Maybe this might be like a 4-hour chart. And maybe this happened 2 days ago or 1 week ago, or, you know, maybe 1 day ago or something. We see that price got here and it pulled back, and then somehow price picked up again from here, went to this top. And then at that top right now, what you can see right now is that you can see the first leg of an M structure. The first leg of an M structure is what price has already given you now. You see? So now that you have seen this first leg, you can see when you are doing an M, what is M? M is like this now, right? M is like that. Now what you can see is your first leg here. Look at your first leg. This is your first leg here, your left leg. The middle is what has happened here. That's the middle. Then this other half of the middle is what we are seeing here. What are we expecting to happen next? We are expecting price to do this, and then we are expecting price to come all the way to this area again. That's what we're expecting. We're expecting price to do this. So now you can then take a trade. You can then target a trade. Let me not say take a trade, because there are some things that you need to watch out for here. You can then target a trade from this area, and you can sell all the way to this point. You can enter a trade here. You will know that price is going to come here. You will just know. Why? Because this leg of this M leg, watch this now, hold on. This M leg, this leg of the M is going to have to be equal to this leg of M. This M leg is going to have to be equal to this M leg. So let's do something now. Let's draw this from top to bottom. So this is how you know it. Now you're not drawing diagonally, you are drawing horizontally. You're not drawing diagonally, you are drawing horizontally. So you want to get the distance from this top, this bottom here. Now, when this M structure was forming, when the M structure was forming, it started from here, okay? Now it moved up, then it got to this point, reverse from here, push up to that point again. This distance is what you're looking for. This distance from this bottom here to this top. From this bottom here to this top, this is what you're looking for. That's the distance. And how do you know when you are selling from here now, after you have seen the M structure form, once you are selling from this area now, you are expecting price to do this same distance. Look at this distance. This distance of from here to this top is what you are expecting price to do from this top to this bottom. That's just the way it is. So when you are entering a sell here, you move this here, you can see that price is going to sell from this top to this bottom. So even if price is dangling, playing up and down here, you know that price is coming here. So it depends on you at that time. What kind of a trader am I? You see? So now we go back again to what kind of a trader am I? Hold on. Oh, sorry. So what kind of a trader am I? This move right here from this top to this bottom can be 200 pips, okay? Usually it's long term. If you're doing this from a 1 hour chart or you're doing it from a 4 hour chart, it can be long. It can be like 200 pips. Sometimes it can be more than that, right? So now the question is, how much of these pips am I going to take? Am I going to enter my trade here and exit here? Because you can also exit there and take some of your profit, or I take your profit and say, okay, you know what? I know that price is going to come to this bottom, but I'm okay here. I'm satisfied here. I'm satisfied. I'm okay. I don't want more. I don't want to, because usually what happens is that when price gets to this point, remember this is a support, because price is coming from this top. This is a support. When price gets here, price will definitely react. Price will definitely react at demand and supply zones, at demand and supply areas. Because at this area now, people are definitely expecting to make some short-term buy around this area. So you see that price will get there and start looking as though it wants to reverse. It will look as if it wants to reverse. So at that point, if you are the kind of person who does not want to see, maybe you are on a 1 standard lot trade, and you see that from here to here is like 80 pips, and you're seeing $800 profit, right? And you don't want to see your $800 go back to 500 before it starts coming down again. You might just take your profit here and relax. So it depends on the kind of trader you are. There's usually traders that are like swing traders, or like people like traders that are like swing traders, mostly swing traders. They can take a trade here, and usually they will do this kind of thing on a daily chart, on a weekly chart. They will do this kind of thing on a weekly chart, on daily chart, and this move from this top to this bottom here may be 300, 400, 500 pips. And they are ready to stay on that trade, no matter what happens, for the next 2 weeks or 3 weeks to catch this entire move to this bottom here. But then as intraday traders or as day traders, you may not be able to stay and catch this entire move here. What you may want to be, what you may see that from here to here is 200 pips, and you're like, see, I'm good with 50. And then the thing is happening, and you enter, you catch your pips at 50 pips, and you're out, and you're happy, and you have made money. All right. So, but this understanding this pattern now gives you a clear idea of where price is likely to go when it's coming from this bottom here. When it's coming from this bottom here, you will know where price is likely to go. I can do this, like I said before, this is the first pattern we are considering. We are looking at. There are several other patterns we are going to look at. It's the same thing you will see. For example, now that USD-JPY I was talking about, there's a pattern there right now. It's different from this pattern that is playing out. That pattern is going to currently is playing out. One leg of the pattern has finished playing out right now. It has been broken already. Just this evening now, one leg has been broken. Now it's going to the next one. The next one, it might take you tomorrow or something before it gets there, but it's definitely going there. Definitely going there. And usually when you see these kind of patterns, no matter what you see on trend lines, for example, you might see a trend line like this, right? You might see a trend line that will do this. So price is coming down from here. You are selling from here, right? Price gets to this point, and there is a trend line. There's a trend line here. What will happen is that price will definitely react to a trend line, because a trend line is another support. In this case now, a trend line is a support. So when price gets to a support, price will definitely react, because there are going to be buy orders there, short-term buy orders there. You see? So what will happen is that price will bounce off from here like this and may even go back up. And then eventually, later on, when there's enough momentum, it will break out of this trend line and continue coming to this bottom. So 80% of the time, you will see this thing will play out to this area. And the only reason why you may not see it play out all the time is because, like, maybe get to this bottom exactly. This will happen, but get to this bottom exactly. The only reason why it may not happen like that all the time, sorry guys, it looks as if there's a... The only reason why it may not play out like that all the time is because there may be a news event. Okay, there may be a news event that that changes the direction of the market for that moment. So when the news event changes the direction of the market, you discover that price may not eventually now do exactly what you expect it to do. You see, so there's a high impact event, FOMC happened, non-farm payroll happened, something happened in the market that just basically disrupts the market. Except that happens, you will see that this pattern is going to play out exactly as we are anticipating it, but not in a straight line, but exactly to play out like this eventually. Okay, that's what you call an M pattern. This is what you call an M pattern. Okay, and usually this top here, once this happens, and this gets here, this is what we call a double top. Once price comes from this bottom, goes to this top, pulls back, and the price is going there again, gets to this point again, that's what you call a double top. So the chances of price falling off from a double top is very high. Your chance of seeing a sell here after you have seen price get to this point, reverse, get to this point again, your chance of seeing price pushing down from there is very, very high. Okay, now It's not all the time that you're going to see that happen. That's why I said the chance is very high. Like I said, we are talking about high probability setups. We are not saying guaranteed setups. No setup is guaranteed. The only way you can get to a point where you think your setup is guaranteed, like I said think. The only way you can get to a point where you think your setup is guaranteed is when you are is when you've tested to a certain level, you've tested your setup to a certain level that you know that this is how we enter, this is how we enter, this is where we enter, and I know what is going to happen and all that. It's not a guarantee, right? Because and that's why also always you notice, guys, I always emphasize that you watch the news. Always watch the news, because the only thing that can disrupt what you're doing, you have everything set up, you have everything intact, you have everything in place, and then you just see market doing opposite of what you expect it to do or whatever it is when you are trading during the news and you are not aware that there's a high impact news event at that time. When you are not aware, you are risking yourself, you are risking your account. So be aware, even when you're trading at that time, at least be aware that, okay, there's a news event happening soon. I expect it to go in my favor. I expect it to work for me. I expect it to go in my favor. So since I expect it to go in my favor, I'm not going to bother myself. I'm going to still keep trading, even though the news is coming out. But then you are aware. You are aware of what's going on, and you are not just naive. You are not the person who will enter a trade and be like, okay, I'm relaxed, and then the market starts to turn against you just because you are not aware of what's going on. You don't want to be that person. Okay? All right. So let's look at the second pattern where we talked about. So we looked at the M pattern, that's the M pattern. Then there's another one we call the W pattern. The W pattern is the opposite of an M pattern. Okay? The W pattern is the opposite of an M pattern. So basically what we do is that these patterns, we watch for them play out. Then we will usually trade the last leg of it. We will watch for it play out, and then we will usually trade the last leg of it, because we have already seen, because when you are writing a W, for example, this is how you will write it, right? You write it like this, you write this, you write this, then the last leg is what you are going to write next. This last leg is our trade, is where our trade is. So what we are going to do is that when price is playing out like this, we have no way of knowing exactly what pattern price is going to be giving us. We don't have a way of knowing exactly what pattern price is going to be giving us. We don't have a way of knowing. The only thing we can know is that after this one has formed, then this one formed, then this one formed, then we can now see, okay, since this one has formed, this has formed, oh, now we can see that a W pattern is forming. So now we know that we are going to be able to enter this one and and trade on this pattern. Okay, so that's how we do, just the way we did the M pattern too. If you are writing an M, you write it like this, like this, like this, and then eventually you write this. So this is what we are going to work with. This is our trade. But when this was forming, this formed, this formed, this formed, we were not sure. When this one was forming, we didn't know what was happening. This one, we didn't know what was happening. Then it was when this one was forming now, we decided saying, okay, it looks as if something is happening here. Then price goes to this area and then starts to reverse around here. Oh, now I say, okay, this is an M pattern. Now we are ready to sell from this point to this point. You see? So that's the way we trade it. We are going to look at the patterns. We will watch for it forming. This thing happens over time. You start to monitor it, you start to watch it. Then after a while, you start to notice when the pattern forms, right? You start to notice, oh, okay, this pattern is forming. I can see this particular pattern forming. Sorry, guys, I'm trying to close out this thing. I'm trying to delete these things so that we can proceed. Okay. Okay, so all right, so now let's go to the W pattern. So when you are watching for a W pattern, you will usually see price coming from a top. You see price coming from a top like this, right? It does this, it does this, it just keeps coming down like this, right? At a point, it gets to a certain level, and then you start to see something happen. It starts going up a bit, it gets to a certain level, and usually this area it gets to would be some kind of a retest, a retracement of this major move right here. Look at this move right here. This is a sell pattern, a sell trend. So you will usually see a sell trend happening. This is a W pattern now. You will usually see a sell trend happening. So price is selling. It will now sell to a certain level. Then it will now start to do what? To retrace. It will now start to retrace. It will now start to retrace. It will retrace to a level at this point. It will retrace. It will retrace to a level. It got to this point. It came from this top to this bottom. It came from this top, right, to this bottom. Then it started to retrace. It started to retrace from here to this area. Okay? When it retraces from there, now let's keep watching. Then we see something like this. We see price pulling back from here, back to this same area again. Notice it now. You see now, this is the point. It gets to this same point, and then we can already see that we are seeing a double bottom. So we are seeing a support here. We are seeing a support here. We are seeing that price is respecting a support here. What's going on here? Price is respecting a support, right? Price is respecting a support. Sorry, guys. So price is respecting the support here. You see, so price is trying to pull back from here. This is where we are now going to be watching. We have seen the first leg. We have seen the middle legs. The two middle legs form now. What we are expecting now is that we are expecting price to buy. We are expecting price to buy from this area all the way to this point, all the way to this top right here. That's what we are expecting to happen. You see? So now this is our trade. This is where our trade is going to be. This last leg is where our trade is going to be. So we already have seen the first leg. We have seen the middle leg. We have seen another middle leg. We have seen price come to this support area here. Just like price comes to this resistance and starts to come down from an M structure. Price came to this support here. So it went up, came down again. As it hits this area, we can already see that the first leg, the left leg of a W pattern has formed. Now we are expecting price to move from here to this area. Why? Because we know that price is going to cover the distance. This distance it covered from here to this point is the same distance it's likely to cover from here to this top. So we know that if we enter a buy here, we can keep buying and buying and buying until it gets to this top. Or if we are intraday traders and we don't have appetite to hold trades, because remember, you know that trades don't go in a straight line. We're expecting a buy here, right? But we know that price is not going to go in a straight line. It rarely does. It can happen usually when there's a news event. It rarely does. So price is most likely not going to go in the direction you expect it to go straight. It won't do that most of the time because people are buying and selling. And because people are buying and selling, the market is responding to these buy and sell signals, right? There's support, there's resistance, there's support, there's resistance. People are buying and selling, but overall price is still going where it's going. So now you might decide that from here, from this top, from this bottom to this top now, you might calculate it and say, okay, that's 150 pips. You say, okay, I won't be able to take 150 pips. As an intraday trader, I only want to take 50 pips and I'm good. But then you can trade it and know that, okay, 50 pips is going to be good. Or maybe I'm going to take 70 pips. Maybe I'm going to take 80 pips of this trade and I'm going to relax. Because I know that from this move, I'm seeing 150 pips, 180 pips. I know that price is going to go back to this area right here. Price is going to go back here. So since price is going to go back to this point, so I'm expecting that if I buy here, price is going to go here. But I may not be able to wait for price to get there. Why? Because because price doesn't go straight. It goes up, down, up, down. Maybe I don't have the appetite. I don't have the patience to wait for price to go up, down, go down, go up, go up, go down, go up. So sometimes you can enter a trade and you see a trade do 50 pips. And then you see the trade reverse again, and your 50 pips will now come to 10 pips before it starts going again in your direction. So if you are the kind of person that can see your trade go to 50 pips and then come back to 10 pips and then go back again, if you are that kind of a person, then of course you can catch the move from this bottom to this top without bothering yourself. But if you are not that kind of person, you see 50 pips, you don't want your 50 pips to go back, then you take your trade, you take your profit at that point and you move. And remember, guys, you cannot go broke taking profit. I don't know if you've heard this before, but it's usually something you hear around trading. You cannot go broke taking profit. If you are taking profit and withdrawing profit from the market, you will be more confident. You will be more confident. You will be more relaxed in your trades. You will feel more relaxed in your trades. Because whenever you enter, let's say you found an account with $1,000 and you enter a trade and you made 200 and your account is now 200, is now 1,002. Now you entered another trade, and then the trade is actually going against you to the tune of $250. Now it's looking as if your entire drawdown now on that account is $250. But then imagine that you have $1,000 in your account and you made 200 and you withdrew. Now you enter the market, you are on a trade, you're like, okay, my 200 is out. Even though you still have 1,000 in the market, you are thinking in your head, my 200 is out. In fact, this market, I'm not really so, you'll be a bit more relaxed. Not that you are relaxed and you don't care what's going on, but you're a bit more relaxed, knowing that you're pulling profit from the market. But let's say you have $1,000 in the market, right? And then you made profit and you withdraw $1,000 and you still have $1,000 in the account. Now you are different from somebody that just funded 1,000. Because right now, the 1,000 you put there, you have already made your 1,000 back. Now, the money you have in the market is what you call house money. It's profit money that's in the market. So you are going to be more, when you enter a trade, you are going to be more calm and relaxed than somebody who just funded now. If he sees minus $100, he start calculating, oh boy, I've lost $100. Even though he has not closed the trade, even though he has not lost the money, but his head is calculating, how? I just lost $100. My account is now 900. But if you withdraw 1,000 and you're on that trade, you are still in the same trade and your trade is seeing 900 minus 100. You are not bothered because you know that, okay, this trade, even if this trade doesn't go well, I can still close this trade negative. I will still make another money tomorrow. I'll still make another money tomorrow. So I don't really care. So that's the mindset. That's the mindset that helps you more when you are able to collect your profit. So if you see 50 pips, you are entering, you are buying from here, and you enter the market and it gets to this area right here, because this is definitely going to react to price because this is a resistance. Price is coming from this bottom here. This area is going to be a resistance, right? This area is going to be a resistance. So price is going to hit it and push back first. You can decide then, you know what? I'm going to take my profit there. And you take your profit. And then you may look for a gain. If you see another opportunities after price breaks out of here, you can then enter again and start going up. You see? So if you don't see another opportunity, or you are busy, or you're doing something else, you don't care. You already bucketed 50 pips. You see? So that is the way you trade these patterns. But the major thing is that when this happens, when you see this pattern forms, it gives you a certain level of confidence as to how far price is going to go. It gives you a certain level of confidence as to how far price is going to go, because there are certain days where you will enter the market and price will not be moving. Price will not be moving. So on those days, you might decide that, you know what, I'm just going to exit this trade and I'm going to be out. Or you can decide that, you know what, I'm going to hold this trade because I can see the pattern. I can see that this is a W pattern, maybe on the 4-hour on the 4-hour chart, maybe on the 1-hour chart. I can see that this is a W pattern. I can see that price is going to go here. Then you go to the news and you look at the news. There's nothing in the news right now that's scary. There's no major news event happening between now and tomorrow, for example. Okay, so there's no need for me to be alarmed. Let me relax and wait for this price to play out. So your mind will not be full of doubts. Am I wrong? Am I right? Am I wrong? Am I right? No, you already have seen what has happened. You have seen the first leg of your W. Now you know that the right leg is what's forming next. So you'll be more calm. You'll be more calculated. You calm down. You look at the news. There's no news event to disrupt the market. So you relax. So you might see, lackluster movements today, but by tomorrow, market might just open and you see the market start breaking out, start going in your favor. This is something that will happen every time, no matter the instrument you're trading. I was trading USD JPY last week, and this was the kind of thing I saw. Even I had my setup marked out. Okay, it's going to go to 135, right? So eventually, it did all kinds of things. Eventually, on that day, no serious movement that day. The next day, the thing just took off. Went to my take profit, went past it and all that, right? And I was busy doing other things. That time, I didn't even now enter the trade again. And the thing just went, I was just looking, I said, man, look at this thing. By the time I saw it, it had already played out. It had not gotten to my take profit, but there was no entry anymore at that time. I can't enter again. I can't just see price just going, and then I jump into it. That's not how good traders trade. You don't jump in. You might do an analysis and you did not enter. And then you see price now playing and moving heavily in your direction. You don't just jump in. You have to wait. You have to wait for price to pull back to give you a setup. That's why you need to have a trading plan that has your parameters of entry. What do I need to see to enter a trade? You see, what do I need to see to enter a trade? All that must be in your plan. So you don't just see, oh, price is buying, let me jump inside. No, you don't jump in. You hold on, you wait. Because you may jump in. At that time you jump in for the buy, that's when it will now reverse. It will now reverse and go to a certain setup that you did not see. It will now go there, enter, and then start going. This morning I had a trade on. I had a trade on last night, right? So the trade did not trigger. I think I woke up early in the morning about 4 a.m. I said, okay, I think I have a trade wrong. I have a setup because I knew where my trade was going to be. So I put my pending order there. So I took my phone, I checked. I saw that it did not get to my entry. It reversed and started coming. It was a sell trade. It didn't get to my entry. It reversed and started coming. Wow. And immediately at the time I saw it, it was already coming. Probably it has already done 30 pips though. But my entry missed my entry. I was like, wow, what do I do? So I said, well, this happens in trading. I just forgot about it. Went to prepare for work and everything. But then as I came to the office, I opened my laptop. I was doing some other things. I said, okay, let me just go to this chart and check. I realized that it reversed and then went back to that entry that I placed before that did not trigger. Went back there, hit my entry, entered the trade. And then it started coming by. Eventually, I made some good profit on that trade. So what I'm trying to say, if I had changed it and said, no, this thing's already coming down, let me enter, I would have been in huge drawdown. I may have closed that trade in negative. But meanwhile, since I left the trade there, it still went there and eventually triggered, right? So I don't know, sometimes when I see that kind of thing, that my trade did not trigger, I usually will close the trade and go away. But in this case, I didn't close it and it still went back there and it triggered. So what I'm trying to say is that know where you are supposed to enter your trade. And if your trade if price has not gotten to that point, don't enter. So that's what you need to do. If price starts going in your favor, oh, you calculated this thing, oh, this thing is already playing out, don't enter, relax. Let it give you another entry. So my intention then was, okay, this thing, maybe I should give it some time. If this thing eventually goes in my favor to a certain level, it will give me another entry, another different entry at that time, right? So that was what I was looking for. Eventually, it still gave me my first entry. So what I'm trying to say is that what I gained from there wasn't just the fact that it went to my entry. What I reinforced there was that if I jumped into that trade, I saw it coming down. Oh, let me enter so that I don't miss the profit. It is the drawdown that I would have been in that was I was even watching. I was like, if I had the drawdown would have been very bad. You get? So that's why you need to wait. Study your pattern. Look for where what's happening on the chart. Enter your trades at the right place, and then wait for your trades to play out. Okay. So do we have any questions? This is what we are going to be going through today.